What's up everyone, my name is Joris. Retiring in your 30s, how is it even possible? Why would you do that? And won't it get boring? Retiring does not per se mean you have to stop working altogether. It does mean to work when you want, on whatever you want. Whether you're working to make more money or if you're running a non-profit business. To me, retirement is to do whatever I want, whenever I want. A while back, I encountered the FIRE movement, the Financially Independent Retire Early movement, a worldwide group of like-minded people who try to escape the rat race of life and to be financially secured enough to just do whatever they want, when they want. Whether it's just to lie on a beach all day, to move to another country, or to choose a profession in which they can do whatever they want. The key part in all of their stories is that retirement does not per se mean not to work, but it's to not worry about money whatsoever. Some consider a passive income of 1,000 euros a month enough to become FIRE, while others want to make sure that all their bases are covered and they need at least 10,000 euros a month of passive income. In this video, I will show you how you can start off on your own FIRE journey in a few easy steps. I will provide the blueprint and I will add some handy tips and tricks to help you along the way. Now, first off, do mind, FIRE is a lifestyle. It does affect all parts of your life. You cannot spend a few hours a week just to do some financial stuff on your computer and hope that you will be able to retire early. No, you have to put in the hours. You will have to set up some rules for yourself and you have to follow them throughout your day, throughout your week, throughout your year. The main principle of starting your own FIRE is pretty easy. You have to make sure that your monthly income is higher than your monthly expenses. And after that, you will want to reduce your monthly costs of living as much as you can. Ideally, you will boost your earnings and make more money each month. And lastly, the most important step, you have to invest as much as you can. Whether it's in the stock market, in real estate, or somewhere else. That doesn't really matter. As long as your money is invested well, it will generate extra income and help you in your journey. The second your monthly passive income surpasses your monthly expenses, you will have achieved FIRE. Now Joris, the theory is great, but what about some actual tips, yeah? I will give you 8 tips and tricks to set you up on your way. We will start very easy. The first tip is to track your spendings. Make a budget if need be. By writing down everything you earn and spend in a month, you'll have a better understanding as to where all the money is going. And then you can check off all the expenses and see if they are actually worth it. Personally, I track all my expenses and I can check exactly how much I spend on clothing in October 2019 or how often I get gas for my car. I do not budget, however. I find budgeting too limiting. If you have tracked your expenses for long enough, you'll be able to decide for yourselves whether it's okay to spend more on clothing this month or that you have to cut down this month. I have been tracking my expenses for over 3 years now, but I've never budgeted and I never ran into any problem. Number 2, split your expenses in 2 categories, the fixed expenses and the variable expenses. The fixed expenses are your monthly obligated payments, such as your mortgage, your utilities, your taxes, healthcare, insurance, and so on. Cutting down on these is often very hard. I do suggest, however, to shop around for cheaper utilities, internet providers, or phone companies once every 1 or 2 years. And even a mortgage can be reduced. In times of low interest rates, like we are in now, you can oftentimes reduce your monthly interest by negotiating your current mortgage at your bank. The variable spending, however, is something we can easily reduce. Instead of going out to dinner every day, cook at home. Buy in larger quantities, travel closer to home, or be more creative when giving gifts. The possibilities are actually endless. Number 3, set up an emergency fund. A very important one. The American FIRE movement suggests to have a fund set up consisting of at least 6 times your monthly income. Luckily in Europe, we have countless social benefits which aid us in times of need. I would suggest to save up to 2 to 3 months of spending in this fund and then adding some few thousand euros just to cover any emergency costs on your electronics, like your laptop breaking down, your car or your house. If you have rental properties though, I would suggest setting aside at least 6 months of mortgage payments on a separate account. Just in case your tenants move out and you can't find any new ones, or they just stop paying, the property is damaged and repairs have to be done quickly. Personally, I keep 1 year of mortgage payments aside for my investments. It might be a lot, but to me, it's a peace of mind. Number 4, save for your pension. Europe consists of many different countries, so you best consult an accountant or banker in your country to get the most information here. Disclaimer, I am not your accountant and all information here is given to educate and to entertain. If you want personal information, consider asking a professional in your area. Anyway, in Belgium we have 4 pension pillars. The first one is the state-provided pension. If you have worked all the way until retirement age, you are eligible to receive a monthly pension. It's paid for the state. Well, actually you have to pay for it yourselves during your working years by paying the taxes. By earning more, you'll be able to affect the amount that is paid every month in your retirement. The second pillar is your occupational pension. Your employer will set aside a part of your wage and invest it in a fund of their choosing. You'll be able to get the money at your retirement age. Most of the times, you will not have a say into where the money is invested or how many is invested. The third pillar is your own regulated pension, which also consists of 2 parts. And they both have a tax break, which is very interesting. In one saving plan, you can invest up to 990 euros a year and you'll get a tax reduction of 30%. There's also a 1,270 euros option with lower tax reduction, which I do not recommend. The other saving plan has a saving limit depending on your yearly wage, or you can save here by investing the interests of your mortgages. The latter is, in my opinion, a lot more interesting. The last pillar of the pension is your own savings for your pension. This can be your house, your investment real estate, your stocks, your bond portfolio, and so on. It doesn't provide any tax benefits, so it's all up to yourself. Number 5. Save up for big expenses like holidays, a new car. If you cannot afford them, do not buy them. Taking out a loan just to get to go on a holiday will result into a very costly holiday. If you save 100 euros every month, you can use the 1,200 euros you have saved up during the year for your yearly holidays. Tip number 6. Pay down your loans and start with the highest interest ones. Paying off your personal loans, credit cards early will result into paying way less into the interests. The interest rates on these loans are often very high and they will cost you actually more in interest than in actual principal. But think of the opportunity cost. If you have 10,000 euros to spend and you want to pay it and you want to use it to pay off your loan with 2% interest rate, you'll achieve a 2% gain on that investment. But if you invest that 10,000 euros in the stock market and gain a 7% yearly return, it's better to leave the loan as it is and invest into the stock market and thus profiting 5% over your loan interests. The more you can invest every month, the better. And that's tip number 7. Use your leftover money in the stock market or put it into real estate, but invest it. The 8th tip I will give you, the last tip, is to live as if you have little money. The more money you can save, the more money you can invest. And at the start this will be very hard, but after a while it will become very natural to you. In an ideal situation, you would be saving around 60 to 70% of your income. Spending less and saving more speeds up the way to financial freedom. Now, how am I achieving FIRE? Well, my main goal is to have at least 2 million euros invested in either real estate or into the stock market. And this way, I plan on generating enough passive income to cover all my monthly expenses. At this moment, I managed to save 81% of my monthly income. And all that saved money will be put towards more passive income whenever possible. In the next video, I will explain how I do this and how I want to reach my FIRE goal. So, those are my 8 tips to financial freedom. I hope you have enjoyed them and I hope you will implement them in your life. Like this video if you did not do that already, and subscribe to follow me for more tips on how to achieve your financial goals. Are you too trying to achieve FIRE? Do you have any tips I have missed in this video? Write them down in the comments below and let's get this conversation started. I will see you in the next video.